Hey, what's up, everybody? Welcome back. Xavier here with the chart. So we're gonna be doing a little bit of a recap um, for this week. Right, today is Friday. It's about 8:30. Just woke up a little while ago. I came home. I worked last night at the hospital. Came home this morning and basically traded almost the entire day. It was a good day. If you had followed originally, I had posted talking about NIO, Workhorse, and Palantir, and those were basically the stocks I literally traded just about all week. Um, quick one update for the M Finance. As you can see where we are, we're sitting in just about 2,400 in cash. I have made some changes into the allocation of my portfolio. So for 2021, I am betting about $10,000 worth between JetBlue, Wells Fargo, ExxonMobil, and Dave and Buster's. Those are going to be my four plays that I'm going to be making probably within the next month or so. I'm going to allocate. I've already have some allocation, but in terms of the between the four allotments, basically going to have 2,500 in each of those. I bought ExxonMobil today and we had a pretty good day. I was up a little bit over 1%. So I put in 700 for a buy today. That went through. You can see that went through here and we were already up on the day 1.4%, which is fine. I did sell out of most of my Foot Locker as well as Bank of Nova Scotia, whatever was there. I basically moved that out because I have too much in banking between Wells Fargo and JP Morgan. I was going to keep it, but it did gap up. BNS did have quite a bit of a gap up, so I ended up just taking the profits on that, basically just at about the highs, and it's slightly pulling back. If it does pull back to about 44s, I might think of going back in. But looking back at the chart during kind of like basically the bull market, it was not doing very well. And I really don't want to be that overweight. And I have a lot in finance already. So I don't want to be overweight that much in the banking sector. But I am betting a little bit bigger on recovery. And so recovery for me is airlines. I like JetBlue because they are here based here in New York. They're a little bit of a smaller airline, but from what I've been reading, they're basically recouping and taking up a lot of American Airlines work flow that they would have here, because American Airlines has a lot of debt, so they've had to minimize where they're able to go. So they've basically given JetBlue some of their business, and then they're hoping to recoup some of that, like international flights later on from JetBlue. JetBlue does have a little bit less debt. As you can see, for JetBlue, we did have a little bit of a bump, and I did take profits. I did take profits on that huge gap up because I was long at $10. So I ended up taking about $5 worth. I have a little bit left. I ended up taking a little bit more profits here today, but I'm gonna wait and see. For the short-term play on my Robinhood account, I do utilize my Robinhood account. I have a small Robinhood account that I put $100 in. I used to do options a lot on Robinhood, um, and I kind of flipped over when I started using Webull, and I decided to come back to Robinhood. So I utilize Robinhood just for options. So I did take some short positions for the next week or two, and I basically bought. I'm basically short-term betting against news on Biden's coming into office. So I bought puts for what's it called? What is this thing? Canopy. So it looks like we might have a little bit of a resistance here. And so I ended up buying a put. I bought two puts toward the end of the day. I put up $100. Same thing with JetBlue. I did go short. I bought a put for JetBlue for 14s, and these all expire on these two expire on the 20th. I still have my Mattel put that doesn't expire to the 27. Kind of what I felt it was going to come down to 50s and then bounce, and that's basically exactly what it did. And then I bet on Workhorse on the long. The Workhorse call expires on the 27th, so I bought a 26 call. So that's basically what I'm doing now. That's just basically in my Robinhood. You can see my Robinhood. I've only got about 400 there invested. I started with 100. I actually took it from 100 all the way up to about 3 something on two different plays that I made. And then I got squeezed. I think I previously called. Um, I think I previously called Workhorse last time, and I did have the opportunity to take some profits because I bought it like here, and then we gapped up, and I was thinking there was going to be a little bit more of a retracement, and then we had those two back-to-back days where the market slid down really hard, like right here. So this is when I bought the call, and obviously if the market came down like over 2,000 points. So obviously if you're buying calls, those calls are gonna basically expire out the money. So at one point I actually was up in it. I was thinking the market was looking to break out. I was up about $60, but I was thinking that I was going to make a couple of 100% um, on the call, and I ended up basically losing money. So I took all my profits and I went all the way back down. I think I was down to like $64, but I had purchased a JetBlue call. I had purchased a JetBlue call, and of course on the gap up, I immediately sold it. I made about $400 on the play, and that's basically why my account, I was up another four. I was up to about four something, but I've got those four plays, and I'm basically going to be looking to those for the next 2 weeks. So like I said, I did buy, looking over here at the activity, like I said, in terms of the buys that went in, I did put in 700 for ExxonMobil, 250 going into Wells Fargo, and you can see the rest I'm basically just adding to stuff that is either slightly selling off. Obviously things like Simon Properties, real estate, of course, will be problematically hurt for the next year or so. We'll have to wait and see, but we're seeing a little bit of a bump with the vaccine news. So I'm basically buying a lot of these stocks that pay fairly well dividends, and we're looking for the long term over the next couple of years. For me, like ExxonMobil, Wells Fargo was probably about 5 years out in terms of being able to take profits. But looking, if you actually take a look at Wells Fargo, um, during like the late 90s and the mid 2000s, where both times Wells Fargo saw huge pullbacks, they both resurged, and Wells Fargo went paying from like the least amount, the minimum of dividends, to basically paying, quadrupling their dividend as well as their revenue. So that's basically my bet. I'm going to be putting a total allocated to of about 2,500 between each of these, between Exxon, Wells Fargo, JetBlue. I'll be adding back for basically over the next month or so. Um, so that's basically the plays that I'll be working over for about the next month. Still have a little bit in cash, not so much on the dividends yet. I think most of my dividends are coming after the 15th up until the end of the month. Got an 80 cents dividend from Apple. I really don't have a lot in tech. I was never really tech heavy in my portfolio. Mine was more on the depressed stocks like JetBlue, Wells Fargo, Carnival Cruise, Dave & Buster's. I got a little bit into Chewy, bought a little bit more. I do like the stock. I will be continuing to add to it. Prudential, of course, is another bank that I have, but that's more for like more like of an investment bank. I should have originally bought it when I heard that the Neisner Union was swapping over from where they were. I think they were in Fidelity, I forget. And then they ended up swapping over to Prudential. Unlike an idiot, I didn't buy the stock, and the stock went from like 64 to like 90, obviously prior to the pandemic. And then it really in tech, these are just like the generic tech, Apple, Square, Chegg, which is more educational, Nvidia, I'm a gamer, Amazon, obviously, Microsoft. At least Microsoft pays a dividend. I believe Nvidia pays a dividend, and of course Apple pays a small dividend. That's kind of why they're in there. Square obviously is like my Bitcoin, like anti-banking, the flip side of the banking industry. And I do like Nvidia. Amazon is just like Amazon, hold Amazon for whatever. In terms of in my finance section, as you can see, I did go heavily into gain. So all of these, of course, pay dividends. JP Morgan, Maine, they all pay dividends. Like I said, I do have quite a bit into banking, and I'm betting over the next five years or so that we'll see a surge to the upside, not just, of course, in growth, but of course in dividends. I ended up putting a little bit more into gain, so I've got about 200 shares of gain that will return $14 a month. Maine, very similarly, I'll be putting a little bit more money into that. JP Morgan had a huge gap up, so I'm kind of hesitant on how much I'm going to allocate to it. If it does come back to like 104s, we get a little bit of a bounce, I'll probably start adding to it, but I'll have to wait and see. But as you can see, JP Morgan prior to the pandemic, you can see the trend, right? So the trend is your friend until, as they say, it's not. So we are seeing JP Morgan for the while was holding below 104s. And as you can see, obviously because of the news of the Pfizer vaccine, that we have a huge gap up to the upside, but we're starting to see a little bit of a sell-off as different news comes out, etc., about lockdowns. And we're going to be having lockdowns and more restrictions in places like New York and Florida. So these are things to take into consideration. Just don't go all in, be patient. We will see pullbacks over, at least until we see a real transition into the presidency. And then we start to see, with the elections with the Senate, et cetera, with all the Republicans, and see how many more seats are they going to flip. So we're going to have to wait. There's a little bit of a waiting over the next couple of weeks. So like I said, if JP comes back to about that 104s, I'll probably add a little bit more to it. In terms of the rest of their portfolio, I have a couple of buys going in, which is into Iron Mountain, a little bit more into Wells Fargo because I'm trying to get to that $2,500 mark. And then if JetBlue has a little bit of a pullback, which is why I purchased the put, I'll take the money that I make from there and then flip that over and then add that into the portfolio. And then I'll eventually get back up to where it was. But as you can see, we're up about 4,000. We had a good day. In terms of the one day, we were up 1.8%. The market on the day was up 1.37%. So we were doing a little bit better than the market. Like I said, up almost about 500. Not too much in the way of dividends. It says I earned 14. I don't see it. Maybe I'll see it come Monday. It'll come into the account, but I'm not sure. So far, it's only showing Apple. Looking at the trades that we did for the day. So in my previous video, I talked extensively about stocks like NIO. I clipped about 4.5 points in NIO. I'm going to pull up the Webull here. But as you can see for the week and the little mini account, for the day, we were up $205.42. We're up almost 3% in the account. And again, this is not a buy and hold account. This is my swing account. So I take this account and I basically will either swing it for the day, I'll swing it for the week, etc. I'll do shorts as well as going long. So for the week, we did pretty well. We were up about 2,200. A lot of that came from stocks like NIO, Workhorse, Slate, Carnival Cruise. We had a little bit of a flip with Carnival Cruise. So let's go into, my current balance, as you can see right now, I am in Workhorse. I have a little bit of Workhorse, and it was because I was long. It had a huge sell-off. So I actually rode it all the way up, sold it at the highs. I still had, I think, 10 shares left of my original holdings, which was 125. Ended up selling out of most of my Workhorse on the way up, which I'll show in a second. We can go through the orders. And then I saw Workhorse basically falling out of bed. So I started putting in real small orders for 2 shares, 3 shares, 5 shares, etc. Because I was really trying to get it as cheap as possible, because obviously it's going to, Workhorse is going to come back up. Same thing with Palantir. We'll review that trade as well. That was a really good trade. Didn't have a whole lot in this. I had about 70 shares. Currently I have 92 shares. I'm up 116. So my original price in Palantir is, where are we? 14. 1 second. We're long 92 shares at $14.67. So let's review Palantir first. So I had called this one out quite a little while back. So look at I got out at $17 on quite a bit of my shares. So originally I took profits, I think, at 16. We'll take a look at it in terms of the filled orders. I wish I knew how to filter. Can I right click and filter? No, I can't. All right, so we got to go through it all. So let's go through. I think this was on the way back. So as you can see, I ended up selling some here. I only had a couple of shares left. I had 125, ended up selling most of my stock on the way up. And I only had, I think, an additional 15. And like I say, I always kind of split half. So I ended up selling my last little bit. I only had 8 shares left when it was basically falling out of bed. As you can see here, I sold 10 at 16.75. You can see I sold another 25 here at 16.75, and I sold another 25 at 16.50. So basically, as the stock was racing up, I was basically piecing out. I had, like I said, I had 125. I sold 50 and I had 75 left, and I was basically piecing out on the way up. This way just makes it a little bit easier for you to hold. If you take a little bit of profits, you'll feel a little bit more comfortable. And of course, obviously, as you can see, that stocks can have violent turns in either direction. We saw the exact same thing with stocks like NIO today. NIO to the sharply to the downside today. I did buy it on the way down. Unfortunately, because I don't have the full 25K in the account, I was restricted. I didn't have any more trades, as you can see here, right? So I didn't have any more trades. You can see that down there, trades left for the day because of the pattern day trade rule. So this forces me to make better decisions, because I don't have the ability to immediately get out if I see the trade going sideways. So the trades that I find, I have to make sure that they're solid trades. So on that huge drop to the downside, I actually was trying to buy NIO at like the low 40s. On the first rip up, I ended up getting 5 shares. I ended up with 5 shares. I bought 44s and it went up 2.5 points. And I'm like, are you kidding me? Like, I was trying to get in like a little bit more. I wanted about 50, 60 shares, and the thing ripped up. I was like, I'm sitting here with 5 shares. And I'm looking at my P&L and I'm like, am I really up like $14 on 5 shares? Like, you gotta be kidding me. But I wouldn't have been able to get out anyway. And so it ended up pulling back. Anyways, let's go back to the rest of the Palantir trade. So you can see, like I said before, I got out as 25, so that's 50 that I ended up getting out, and then that's 60, and then like I said, I had 15 shares left because I had 75 remaining as it was going up. So I had 15, I pieced out of 7 at 17, and then immediately the stock fell all the way down, and you can see all the way down here. Let's see where the long was on Palantir, as you can see right here. So here I'm getting long. Like I said, when I typically trade, I will trade up to like 125. Sometimes I'll go up to 225, depending upon the scenario. But for the most part, I will typically stay at about $100. And my goal is to clip at least, you know, a point or two on many of these trades. And I'll kind of trade in and out of the position over the several days that I'm in the stock. So as you can see, this is typically what I do. I typically will put in like 5 shares and I'll start spreading them out, you know, 10 or 15 cents or so apart, mostly because I don't know where the market is going to stop. I'll have a general idea of where resistances might be, but sometimes stocks will blow through resistances temporarily. And then, you know, depending upon if you're looking at like on a 1 minute or a 5 minute or on a daily chart, you might see stocks rip all the way down, but then they close at basically the prices that you were thinking that they were going to close at. So there's always, within the day, there's always wiggle room that you have to allot for. And so I'm fairly cheap. I want to try to get a stock as cheap as possible. So I typically put my orders fairly low. So as you can see, when I was buying the Palantir, as you can see, I was buying fairly low. I think I originally, in my other video, I had said that I had started buying a little too early, right? You can see that right here, where I was buying at 15s. And I said in my previous video that I looked over at the chart, I realized that I was buying a little bit too early. So as you can see, my original entry was right here, 5 at 15.40. And I bought a little bit more, and then I realized that the stock was going to start to come down, so I kind of halted my buying, and then I started buying a little bit more right here, as you can see at 13.30s. I think it was a low of 13.25 right here, and then I started buying it again a little bit on the way up. So all in total, ended up with about 125 shares. So I think my average price was 14. So we clipped about 3 points on just about, I should say 2.5. For the most part, I got out most of my shares at between like 16.50 and 16.75, and I only had that last little bit. So on the way down, as you can see from the chart came down fairly hard. And so I was thinking that the stock was obviously, as you can see, there is quite a bit of a base that is around $14. But again, I don't know if the stock is going to stop at 14 or if the stock is going to utilize this base. I have no idea. And that's why I space my orders out the way I do, because I don't know. As you can see, right, the market could have decided that this was enough of a pullback from 17 to 15, and it could have chosen to go up. I don't know that. All I do is watch the charts. I pay attention to the charts. I look at where my support and resistance is, and I play off of where the supports and resistance are. and then I'll wait. Sometimes you'll have to wait maybe a day or two as things be, if you get too sharp a move to the downside. I pay attention also here. As you can see, this is the daily chart, and as you can see, the stock came right about down to that moving average, which it was about 1460. And that's basically what I was kind of counting on. That's kind of why I bought it. We're seeing a little bit of a move here to the downside of the moving average, so there could be a little bit of weakness in the stock. I may end up taking profits on the 116 just because of what I'm seeing here, unless we get a gap up. Right, so unless we get a gap up on volume and we start moving above, we could see a little bit of a move to the downside. As you can see, there's a little bit of a base here at about 1460. That's basically what I'll be counting on. If it breaks that, I'll probably end up looking to go short, probably for about 60 to 80 cents, or maybe, have to wait and see how far down, what the scenario looks like. So that was basically that one play. Like I said, I had 8 shares left, and then as you can see on my sell, you can see I started buying again. As the stock started coming down, I started putting in a little bit of the orders. I think I did make a mistake on this one. I think I wanted 50s and not 59s because I had 8 shares left, and I was trying to get 50s. I made a mistake and I clicked 59 instead of 50, or maybe it like auto adjusted, whatever. Then I just started buying a little bit on the way down. We were able to get as far down as 1450, and so like I said, currently I'm long 92 shares with an average price of 1467. And of course, we're now sitting at about $16. I think the stock will come back up, which is what I'm betting on. I'm betting the stock will go back to 17, which is why I'm still holding the positions. So still up well over a point in that play. NIO, we did make some moves in NIO even afterwards. I did get a little bit squeezed, and I did want to talk about that one. So as you can see right here, I ended up shorting NIO 55 shares at 45, and I got squeezed. Actually, excuse me, where is it? Right here. So I ended up starting to get short. I think NIO had a pre-market gap down, and it raced up. I didn't want to get short this low. I was trying to put short orders like at 44s, like 60s and above, because I was thinking it was going to come down. And I started seeing like a lot of buyers step in at like 46. People were like pushing the stock to 46s, and it was hitting 46s and like coming to 46.10s and then coming back down, 46.10s coming back down. And it was entirely my fault on the play. I lost about $30 on my about $35 on the play. I was looking forward to see, because it looked like it was going to come down, but I ended up getting squeezed a little bit more than I wanted to. It was entirely my fault, because I was staring and watching, and I could see it on the way the stock was trading, and it kept hitting. Like I said, it kept hitting. They would try to drive the stock below 46s, and it would hit 46 and then hit 46.10, hit 46, come right back down, 46 and then 46.10, come right back down. And like an idiot, I'm sitting there like staring at it, like mentally in my mind thinking about the position. Like I'm mentally looking at it, and I'm already getting that feeling like I'm gonna get squeezed. And instead of and I held it for too long, and that was exactly my fault. And it was important to understand that when you get that feeling like your intuition is letting you know, I think I'm going in the wrong way, it's important to listen to your intuition. So instead of catching my cover at $46, I ended up getting at $45, right? At $45, that's what it was. It was hitting 45s and then 45 cents, because you can see where I was getting short right here at 44.50s, and I got a little short a little too early, so I put more of my orders further up, thinking that we were going to maybe hit 45s and then Peter Pan down. And as you can see, I was trying to get out at 45s, and you can see right where I ended up limit ordering at 30s, and I got filled at 25. And so this is a good example. I could have saved myself an additional 25 cents, but think about if you had size, if you were actually trading like a little bit more volume, like if this was 550 shares, that's quite a bit of a squeeze. That extra $12 or so, turns into an extra $120. It's all relative, but that was entirely my fault. As you can see, even though I had a really good play in NIO, I actually saved. I think this was my last available trade. This was my last available trade on the day, so I only had one day trade left, and because of the PTD rule, so I saved it for NIO because I knew like I said in my previous video, that there was always buyers coming in to NIO. So you had to be real careful if you were going to be shorting it. You had to be, in and out, because if the buyer stepped in, you would get squeezed. And that's exactly what happened to me. But as you can see, with NIO had a little bit of a play to the downside, as you can see, shooting very far down. And of course, I am long, I think we're only long a couple of shares, right? Yeah, I'm only long 15 from 43.75. I ended up falling asleep a little bit in the afternoon. I was kind of tired, obviously, because I had not yet slept from my night shift, but I had a couple of orders in. I think I had a couple of orders in for 2s and 5s. I'm not sure. Let me see. Let me look back and see where I got filled. Yeah, I had a bunch of 5s in, as you can see. And this is, like I said, this is typically what I do. I'll space my stuff about 25, and then I'll put like at 50, I'll put like a bigger order, like 10 or 15 shares. Same thing at like a quarter. But then I might put like 2s or 5s at like 90, 80, 70, etc. That's basically how I kind of piece into positions. Again, because I don't know where the market is going to have a little bit towards the upside. The other stock that I had was CCL. In CCL and Carnival, I did go long. CCL, as you can see, I'm long 170 shares, and that's my fault because I got in too early. So looking at Carnival Cruise, I got in a little bit early, thinking that we were having a little bit of a base. I think it was about right here. I got to see, when was my original entry? Let me see. So you can see, again, 5s, 10s. Let me see, where was my original entry into Carnival Cruise? I was actually down like $90, and then of course I knew the stock was going to come up to the upside. I was just waiting. So I said, yeah, this is where I was buying, right? So as you can see, I was buying fairly high, right at 1550s. I think I was actually trying to fix the trade, but I think I was a little bit higher. Let me see if I can find that. I think it's right here. Yeah, see, 1690, because I was looking to scoop it up. See, I ended up having to fix this trade. This is what happens when you're a little bit too eager and you're getting in. But like I said, sometimes if you know that the stock is gonna go, the stock is gonna go up. I think was it here? Maybe it was here that I was buying it. It might have been here on the gap up and pre-market, and then unfortunately it sold off. But in any event, as you can see on the day, we did have a nice move to the upside. There is a little bit of a base here at about 1625, so we could see, a move back to the upside into the 20s. And so I'll have to wait and see how that plays out with that stock. I think that was it for. I think that was it. Like I said, I am back in work. Those are basically some of the plays that having a little bit of move to the upside. On the daily chart, you can see it kind of right here. We have a little bit of resistance right here at 25, like 25 and a quarter. You should be able to see that right here. And it came down to the moving average, bounced off the moving average. So we could see it come back up into the upside, into like the upper 20s, like 27s. But I don't have that much. I've only got 40 shares. But like I said, for the week, we're up almost 2,300, and it wasn't a bad day. Up 205. I was actually up more on because I took profits. So I think we made about 350 on the day, because I think when I closed out yesterday, I was only at like 6,800 in terms of my net account, and I didn't add any money to the account. But that's basically going to be it. Looking forward to next week. Monday, I'll probably be watching the same stocks unless any news comes out. And then, of course, looking for buying opportunities. Like I said, ExxonMobil, Dave & Buster's, Wells Fargo, and JetBlue. Are my allocations. This is my 10K allocation that I'm going to be putting in for the next month, as well as, of course, adding to the rest of my account, as much as I can with what I got. But that's basically going to be it. If you have any questions, feel free, of course, to leave it in the comment section. And of course, feel free to subscribe if you're looking for further content so that you don't miss out on the next videos that are coming up. In terms of the market, basically what I'm looking for is some more confirmation. We could see if more states, like we're holding, as you can see, we're holding right now at 29K. We bounced off of it yesterday. We saw a little bit of a bounce to the upside. We did hit just shy of, literally just shy of Dow 30K. We went as high as Dow 29,933.83. So almost at that 30K mark. Looks like it wants to run up, but we'll have to wait and see after all the political nonsense. We'll have to wait and see. But looking, like I said, for the M1 Finance, we're looking to take this for 2021. Again, The purpose of this account is, as it says here, passive income, right? So almost everything in my account pays dividends. I think my current account for my dividends is about 7%. Might be like 6.8 of, obviously, because stocks go up, so it changes that. But that was basically my goal for the end of 2020, was to have a yield of about 6.75. Trying to push it. I've been able to push it to 7. And then, of course, for next year, I want to try to get it to like 7.25. We'll have to wait and see. I think we'll see some good returns with ExxonMobil and Wells Fargo. So I'm going to leave it there. Thanks for watching, and I'll catch you next time.